Good day, everyone. Today we are again on our regular weekly podcast. My today guest, actually co-host, is Mahendra Singh Rohan from America, and we'll be tackling today two very important topics. First one, we'll be investing in RRSP in the smart way to reduce taxation, and second one, how to utilize this money from RRSP in some investment niches that Mahendra will disclose to us in details with some appropriate explanations and graphs and everything that is necessary around that. So Mahendra, how are you today?
Doing excellent, Alex. Thank you again for convening another podcast. It's 4th of January. Happy New Year to everyone.
Absolutely.
Excited to start the
Absolutely.
new year on this note.
Absolutely. So let's discuss a little bit about because I'm pretty sure that everybody wants to have tax reduction or to find the appropriate way how genuinely can be tax reduced and how that money you can deploy in some different either investments or to protect yourself for the retirement or any another kind of action, right?
Right.
So
Absolutely.
I'm also very curious and definitely I will ask a lot of questions.
Okay,
Right?
Alex. Thank you very much again. Everyone, welcome again to this podcast. And I just want to basically cover what an RRSP is for once we're first-time listeners. It's Registered Retirement Savings Plan. Obviously, it's not a mandatory type of savings program, but it is a strategy that you can use to build your wealth for your retirement and also reduce your taxes significantly, minimizing your taxes when you file your returns. So that is the whole purpose. This program is for folks who are looking to either invest and build their nest egg for retirement. Is also fitting the needs of folks who are looking to maybe reduce their tax bracket because they're in that higher income threshold and they want to save and maybe recapture child tax credits, GST, all these type of government credits, and hopefully boosting the tax refund at the end of the year. So that's the main reason why people invest in RRSPs. All right, Alex?
Yes, absolutely. Absolutely.
All right.
So I'm wondering when is the best time to determine what is the time frame that you can determine and take action during the year for the RRSP?
Very good question. It is so fitting. Now is known as the RRSP season. Most folks who buy RRSPs every year, they're aware of that. So the RRSP deadline obviously is you have to make sure you buy before March 1st, right? That's our deadline. That's usually our cutoff, except in a leap year when it's February 29th. So all of your contributions made, right, up to March 1st, you can claim that on your 2022 tax returns,
I see.
right? So that is the perfect question because a lot of folks think that the RSPs you had to buy it before the end of the year to claim it on your 2022 tax return. It's not necessarily so. You can claim everything from March of 2022 to 1st of March or end of February of 2023. All of that you claim on your 2022 tax returns, right?
I see.
Right. So that is so Alex, what I would like to do at this point and to is a good segue here. I would like to share my screen and look at
Great.
I'll look at a couple of slides here on sources of retirement income, right? And this would
Very
lead
good
into
topic.
the RSP. So I always say retirement income in Canada is like a three-legged stool. Is either you get a company pension, which by the way only 37% of the population has right now, or you say, well, I depend on government benefits, which 54% of retirees today retire dependent on government benefits. Okay. And that is
Huge
basically
amount.
that's a huge amount, right? And that basically comes in two forms. which is number one is CPP, which we all, hopefully contribute to the CPP.
Yes.
And number two is the OLID security, OAS, which you only get from 65. So it's the OLID security is a social benefit. You get that from the age of 65. And the calculations, it varies, but it's based on the number of years you've been living in Canada. You must live in the country for at least 10 years in order to be a recipient of the OLID security. The CPP doesn't matter how long you've lived in the country. It doesn't matter how long you have contributed, right? It's based, I don't want to get into the technical bits, but they have a calculation that they use and they determine the amount you get. But if I could tell you the average is not pretty. The average amount of CPP and OLID security is not pretty. So most people would not be able to retire on those two. And this is the reason why we come up with the third leg on the stool, which is personal savings. Because you can't imagine sitting on a leg with two stools, on a stool with two legs, right? So your personal savings would include things like your tax-free savings account, your RRSP, your non-registered funds. But today we're going to focus on the RRSP, okay? So as you can see, this portrays the main sources of income during retirement years, unless someone has a business from which they're receiving dividends every month, or they have a business that pays them residuals in various forms, right? We're just keeping it to the basics right now, okay? So let's take a look at a case study, Alex. This is for someone who is making $63,000 a year, with no RRSP contributions at all. Okay. Now, if the taxes are deducted properly, which is the payroll department of your company would have deducted a certain amount of taxes at source and send that to the CRA, that person should end up with a refund of approximately $2,300.
I see.
However, Alex, as you can see on the screen, if that same person made a $10,000 contribution to the RRSP, now you might want to stop me here. Most people would say, well, hold on, where am I going to get a $10,000? Now, if you look at our previous podcast, you would see we discussed the RRSP loan program where you can get 10, 15, 20,000. Obviously, you could get more than that, but we're just using a small number today. So a $10,000 RRSP loan would literally cost you under $120 a month at the current interest rates in the market today. But with that contribution, instead of getting back only $2,300, you're getting back $5,300. You're boosting your refund by about $3,000. I would say that's quite significant. Would you agree?
Yes, so absolutely, it's huge difference, almost 3 times. But what I would like to ask you now, let's say that you made income of 63,000 and you don't have this $10,000. Most of people do not have saved $10,000 for RRSP, and they will take the loan. So they will get a tax refund of $5,300. That means that they can use these $5,300, of course, if they want.
Yes.
To reduce their RRSP loan instantly, and their loan balance will drop from 10,000 to 4,700. Am I right?
Absolutely. I'm glad you brought that up.
Nice.
Absolutely.
That's nice.
Absolutely. So how about I lend you $10,000 and you only pay me back $4,700?
That's really good. Yeah, so, absolutely. I got it.
Now, Alex, in a case where someone may have credit card debt, which we know the interest is not pretty, it's 19.99 in most cases. What I would recommend, and I think it's financially sound, what I would recommend is they take that $5,000 and they pay down their credit cards. Okay. If there is leftovers, yes, sure, apply it on the loan. You can invest it in your children's education funds. If you don't have debt, you'll capitalize on another 20% from the government there. Because in the RRSP program, you capitalize on 20% grant, right? So there's a number of things that can happen here where if they don't have debt, they can reinvest. They can buy back RRSPs. A variety of different solutions can come out of this. But if there is debt especially revolving debt, high interest revolving debt, like line of credits and credit card debt, I would advise that they pay down their credit cards or line of credit.
Yes.
Okay?
So can you repeat once again to have full clarification? So for this, if you have a loan, RRSP loan, what is the average interest rate for RRSP loan?
Great question. So the average interest rate right now, it's about 8.4% based on where the variable is at right now, right? We're expecting that to go down towards the end of the year. Because everybody is sensitive to interest rates and taxes, right? So that's gonna, so it's currently at 8%. So if you were to borrow 10,000 today, it's costing you just under $120 a month. So if you think about it, putting away $120 a month on your own without going for the loan, how long would it take you to amass $10,000 in RRSP?
Yeah,
It
it's
take quite some time.
85 months. So
Right.
definitely because interest rate on RRSP is more than 8% and your revolving rates are 20%. Yeah, that makes sense that you should first cover your line of credits or credit cards debts in order to reduce your debts. Absolutely agree with you.
Absolutely. And in the absence of those debts, well, obviously we can reduce that interest quite significantly because you're shaving off $5,000 off of your loan, which means more than half of the interest is gone.
Yes.
Right? So we're cutting your interest rate from 8.4 to 4.2. Putting things into perspective,
you're right.
Right? Yeah. So this is before and after RSP. But take a look at this. Now there's a tax saving of $3,000, and usually when this happens, Alex, it brings that person into that bracket where they could increase their GST, right? So you have this person at 63,000, they get no GST, they get no trillium benefit, right? After RSP contribution of 10,000, they're now getting a GST of $180 every 3 months, and they're getting a trillium benefit of $370 for the year. And on top of that, if they have young kids, the child tax benefit will increase as well.
Can you give a little bit more highlights? So what is a trillium? Because audience probably doesn't know what is a trillium, not all of them. And what is the age limit that you can get child tax benefit? I would like to have clear understanding for our audience to know what is the action they can take.
Right. So first of all, child tax benefit, the most common, is parents would receive the child tax benefit, or they commonly call it a baby bonus, right? A lot of moms would receive this for kids that are under the age of 18, minor kids under the age of 18, right? The amount you receive is based on your total household income. So if there's a partner, in that case, it would affect the amount that that person receives in child tax benefit, right? Hence the reason for introducing RRSPs into the game plan, which will reduce the tax bracket, right? Thereby allowing that person to capitalize on additional child tax credit because the amount is calculated based on income. These are income-based credits, right? Hope that suffices.
So this income-based income is income you calculate only for whole household or for the mother herself?
This is for the household income.
I see.
Yeah.
Okay.
So if we have a spouse in this case that's making 50,000, well, we're looking at 113,000 of income that the government will use to qualify that mom for the child tax benefit. So the more RRSP contributions we bring into the game plan, the lesser the taxable income becomes and the higher the child tax benefit is when they file their returns.
I see.
All right.
And I understand.
The government makes the adjustments around June, July of the next year for any increases or decreases in child tax benefits, right? All right. So that is that. The trillium benefit. The trillium benefit is simple. It's a triplicate of benefits. The government gives you a credit for sales tax, and they give you a credit for your hydro, right? Basically an
Mm-hmm.
energy credit, right? So they give you, if you're paying rent and let's say,
Mm-hmm.
or you're paying property taxes, you're entitled to a trillium benefit, but it's based on your income. Okay. So
Again,
every one of these, the GST, goods and services tax, the trillium benefit, and the child tax, they're all based on the income. Hence, again, the reason why I'm so passionate about the RRSP program, because it allows people to recapture taxes and recapture credits in all of these areas, right? Where
great,
where appropriate, right? So very
excellent.
powerful example where you get to defer your taxes, right? We're not avoiding taxes here.
Mm-hmm.
You're reducing taxes, you're deferring taxes, and also you're able to contribute into your spouse's RSP. That is something called a spousal RRSP for someone who, let's say, Alex, it's for myself and my spouse. I have maxed out my RRSP. I have no more room, according to my notice of assessment.
Mm-hmm.
I could be a
Mm-hmm.
contributor in my wife's RRSP if she has the room, and I can still make that claim on my tax return.
Nice.
All right. So,
Excellent.
so there's a lot of higher income earners I know where they have an RSP room, say 20,000 in a given year, right? Which was 18% of their previous year income. And they max that 20,000 out, but they have no more until they create new income for the following year. So what they do for them to capitalize more on the RSP and claim more, they utilize their wife's contribution room, because maybe wife is a stay-at-home mom, she works part-time, she hasn't used all of her room, or there's maybe no need to use her room right now because of her income, right?
Mm-hmm.
So there's various strategies we can employ to split income, contribute to spouse's RSP, and defer the taxes,
Very
right?
interesting. Yeah.
Interesting, right?
Excellent.
Excellent point. Good. So I'm
Absolutely.
excited about this. And just to recap here on the RRSP loan program, number one is it helps people buy back time to fund their retirement. You think about a $10,000 RRSP loan, it may not sound like a big amount, but what if you can recapture the last 85 months of your life that you did not put $120 a month away into your RRSP? What if you could recapture that with a lump sum injection of $10,000 into your RRSP? What if you could, right?
It's like equal like winning lottery.
you know, and that is so powerful. And number two is you maximize your unused contribution room. I think we have over 900 billion of unused contribution room in this country. Can you
Oh my
imagine?
God.
Can you imagine 30% tax credit on 900 billion if everyone was maximizing on their RSP? That is $300 billion of tax credits that Canadian consumers can use to wipe out credit card debt, line of credit debt, car loan debt, all this kind of stuff. Think about the numbers, right?
Yeah,
Right?
life will
And
be more better. Definitely.
absolutely, absolutely, right? Um,
Absolutely. I agree.
so So, other than donations, RRSP is one of the most commonly used deductions when you file your personal taxes in order to capitalize on your credits, right? So Alex, in terms of slides, this is what I have to share today. There might
Hmm.
be questions which we're open to answer at any point in time. Folks can reach out to us, but I know you may have some other stuff on your mind that you may want to ask.
Yeah. Yeah. So when we're talking about building a retirement portfolio like RRSP,
Right,
right?
right,
So your money is sitting on RRSP account.
right.
What is next step you could not I don't want to say should. It's personal preference. You want or you don't want to do anything with that RSP. First, what are your options with the RSP funds sitting on your RSP account?
Did you mean the options in terms of investing it for building your wealth or utilizing the
Yes,
funds?
yes,
Okay. Okay.
yes.
So that's very powerful, because there's no use piling up all of this money in RSP and have it sit in cash or sit in a GIC making 1 or 2%. It doesn't
Mm-hmm.
make sense, because
Yes.
rules of compounding say according to the rule of 72, if I divide 2% into 72, my money takes 36 years to double. So that's not going to help me to
Yes.
retire, right? That's not going to help
Yes.
you either. So what we want to do is we want to have think of the RRSP as a bucket. Okay,
Mm-hmm.
the RRSP is not an investment. That's the first thing
Okay.
I want to demystify.
Mm-hmm.
So what is the RRSP? The RRSP is a name of an account. It's a tax terminology
Okay.
representing that jar of money you're going to use to recapture taxes. Every dollar that you pour into that jar, it attracts a tax credit to you based on your level of income for that tax year.
I agree.
That's that. Second step is now this money is in my RRSP. It's in that jar. What
Mm-hmm.
do I put in the jar?
Mm-hmm.
So now, what do I put in the jar? It could be one, I could buy stocks, I
Mm-hmm.
could buy bonds, I
Mm-hmm.
could buy mutual funds, I
Mm-hmm.
could buy segregated funds, right?
Okay.
So the water in the jar is like the investment.
Yeah.
The RSP is just a container to give you the tax shelter. What is most important is the contents in that container and how we're going to grow that. So it could be stocks, someone managing their own portfolio, and that's great. But what I believe in is using a professional money management company like what we use, AGF and Mackenzie Funds, Mackenzie Investments. These guys manage billions of dollars around the world. They manage global pension funds, so they kind of know what they're doing, right? And we entrust our clients' hard-earned money in the hands of these professional money management teams, where this is their job 24/7. This is all they do, right? And
Absolutely.
our money management team personally invest at least 2 years of their salary. It's called a co-investment program, where they have to invest 2 years of their salary into the funds that clients are investing in. So imagine how committed that person has to be. They put their money where their mouth is, right?
Absolutely.
So we can invest, let's say, in a mutual fund that brings global stocks, US stocks, Canadian stocks into that portfolio. Client has nothing to do with it in terms of managing it,
I agree.
right?
I
How beautiful,
understand.
how beautiful. And that program, you say you average 8%, 7%, 9% returns over, say, a 10-year period. That's how you could retire, because if you're averaging 9% on your money, you're doubling your money every 8 years,
Oh,
approximately.
this is great. Absolutely.
Right?
So, Mahendra, for the next podcast, I would like to tackle in details how you can invest RRSP money, in what
Right.
kind of investments,
Right.
when you can withdraw, or can you withdraw monthly, can you
Mm-hmm.
withdraw lump
Mm-hmm.
sum,
Mm-hmm.
when you can take
Absolutely.
your money back, what is the taxation on these funds from
Right.
RRSP. Then we can discuss also about TFSA. And of course, if we have any other topics in regards to that, it would be very good because we had to get and bring actually more information and clarification to the clients. But I forgot to ask you
Absolutely.
for the very last. We discussed about taking the RRSP loan in these particular cases for $10,000.
Right.
What is the timeline frame that do you have actual timeline frame that you have to return this $10,000 loan, or you can take easy and return whenever you want?
Right. Right. So there are two things here. Let us say you're just borrowing this money to fund your retirement. You're not
Mm-hmm.
buying a home, right?
Yeah, yeah.
On one side, let's think about it. You're just investing for your retirement. All you have to do is pay back the loan. Let's say it's $120 a month. Then you just keep up with $120 a month payment. It's a 10-year amortization. You can pay it off sooner. There's no contract saying that there will be fees involved or you cannot break the contract. You could pay it off tomorrow if you'd like. Okay?
I see.
So you got your tax refund from the CRA, clean $5,000 in your pocket. You could take that five, pay the 10, now you owe five. Okay?
Yes,
You
yes.
could pay that five next year when you get your next tax refund, whatever the case you want. That is one area. The other area is if you're using that 10,000 to as a first time home buyer, then
Mm-hmm.
that you're using as a deposit into your property. The government requires you that when you do that, they give you 2 years from which you start making a payment back into your RRSP.
I see.
So you're using money from one pocket to put into the next pocket. It's all your money. All they want you to do is to keep up with building your retirement, building your nest egg, not just taking everything out and putting it into your property. They want you to rebuild your RRSP, and they give you 15 years over which you can spread your payments out. So imagine $10,000 over 15 years. It's less than $100 a month.
Yes.
I think most working families can do that. It's not anything.
Absolutely.
It's not an uphill task, right?
Yes. This is very important because people also have to know frequency and time when they have to return that loan as well.
Right.
Great.
Very straightforward, very simple. Our job here is to take the complicated and make it simple for the average consumer.
Yeah, you're right.
We're not here to make things complicated. So this is just a podcast. It's full of information, guys. If you need a breakdown, if you need a personalized game plan, you want us to sit with you one-on-one, myself and Alex it will be our honor to do that. Okay?
Absolutely. So I'm looking forward
you,
for questions. Whoever has to address anything to us, I would be more than happy to help, and with your help as well to help a lot of families, of course. So Mahendra, for the next podcast next week, let's discuss a little bit more about investing RRSP in different forms of investments, and to see how we can, build the wealth for our clients in the future.
Absolutely. I duly noted. I'm gonna get out. That's gonna be probably the most exciting podcast because we're gonna show you what your future is gonna be like. Right? We're gonna show you if you do this, if you invest this amount, what's gonna happen in 10 years, 15 years, 20 years. In fact, for an average millennial, for a Gen Z, for a baby boomer who hasn't built a retirement nest egg yet, what's going to happen for that person in the next 15 years, say, by the time he or she retires, and capitalizing on all the tax credits along the way. I'm very excited about that podcast. So, thanks, Alex.
Excellent. Thank you very much, Mahendra, for your time, and see you next Wednesday.
And thank you very much for your time as well. Thanks, everyone.
Have an amazing day, and thank everyone for watching, and feel free to get in touch with us. Everything the best. Bye-bye.